Hello and welcome back. I'm Natalie MacDonald and you're watching another Sydney Direct. Now, we may be coming into the closing few sessions of 2014, but the Australian dollar shows no sign of slowing down. I'm talking next to Michael McCarthy of CMC Markets to tell us a little bit more about the currency's movements and perhaps what we can expect into the new year. Michael, thank you so much for taking the time to chat with us today. Much appreciated.
It's a pleasure, Natalie.
Okay, so we're talking Aussie dollar today, and the decline in the local currency has been described as a bit of a Christmas bonus to Australian businesses. Would you agree?
Well, there've certainly been some dramatic falls recently, but this is like a car crash in slow motion. The fall in the Aussie dollar has been unwinding for over 9 months now. However, the lows that we've reached here, multi-year lows, are good news overall for the Australian economy. In terms of companies, there are winners and losers, and obviously those who are importing goods are hurt by this lower currency, but those with overseas businesses are doing well, and of course exporters are also doing well, including our important commodity producers. However, the overall impact on the economy is a positive. This is a way of importing demand, and it's particularly important in a world of competitive currency devaluation that we see in Australian dollar, and that benefit to the broader Australian economy should help all companies.
At what point then do you think that this car crash, as you refer to it, is going to come to a full break? Where would the RBA like to see the Aussie dollar end up sitting?
Well, like all central bankers, the RBA isn't saying what its target zone is, but they made it very clear, even in their most recent statement, that they think there's much further room for the Australian dollar to fall. We're currently sitting above 80 cents. It's pretty clear a lot of analysts are looking for fall towards 75 cents. I think if we got into the low 70s, that level would satisfy even the Reserve Bank of Australia.
Now, the Russian Rouble crisis, as separate as it seems, did pave the way for the Aussie dollar to hit a 4-year low. Can you walk us through the correlation between what seems perhaps to outsiders to be quite a tenuous link?
Well, I can understand why some might think it tenuous, but there is a clear connection here. Both of these currencies are under pressure because of falling commodity prices, falling terms of trade. Now, that's economics 101. We should expect that, but currency markets often confound expectations. However, that dramatic slump, particularly in the price of oil, is what's driven the ruble lower. Admittedly, the Russian economy was already fragile. In Australia's case, it's more the fall in iron ore, although oil is an important export for Australia as well. But it's that pressure on commodity prices and the big falls in US dollar terms that have really driven both currencies lower.
I guess almost on a similar thread then, how does the Aussie dollar movements really sort of create that gap that we're seeing at the moment between Aussie dollar commodities and US dollar commodities?
Well, while a lot of Australian investors are very concerned about the fall in commodity prices, many of them have missed that offsetting fact that the Australian dollar has also fallen. And this, of course, means that Australian dollar prices for commodities have not fallen as far as US dollar prices. In the longer run, that's a bigger advantage to our lower cost producers. And in the iron ore space, that's BHP, Rio and Fortescue, who'll benefit not only from the fact that a lower Aussie means they're gaining more for their sales overseas, but these lower commodity prices in US dollar terms hurt those who are competing in US dollars, and so there's a double win there for those lower cost producers.
Michael, thank you very much for your comments today as always, and great insight for our viewers.
Thank you.
That is just about all we've got time for right now, but do stay tuned. I'll be back with plenty more exclusive interviews right here from Sydney, Australia. For now though, it is goodbye.